All right, we're going to go ahead and get started. Thank you, everybody, for joining us. Looking forward to the next hour. My name is Chris Neidl. I am the Impact Director for Rethinking Removals and one of the co-founders of OpenAir. And really excited to be moderating today's session, which is going to focus on the important potential leadership role that Luxembourg can play in the emerging carbon removal economy and sector, particularly in the areas of finance and policy. So I'm joined by some fellow members of OpenAir Luxembourg who have started the initiative LUX-TEN, which aims at advancing carbon dioxide removal in Luxembourg through education and advocacy. We'll talk a little bit more about that in the future. But what I'll do is I'll just go over the agenda for what we're going to be discussing today, and then give a very brief introduction just to the subject of carbon removal and what we're talking about. And then I'll hand it over to my colleague, Jérôme Thomas, who will be giving the main presentation. And then we will have our panel discussion, which will also include Q&A. Okay, let me just add this here. Great. So just to move a little bit through the agenda again, as I said, what we'll do is the three organizations that are hosting today is OpenAir and LUX-TEN, which I mentioned, but also Rethinking Removals. And I know Phillip will put some links in the chat so you can find out more about these organizations and initiatives. Again, I will start with an introduction. This will last about an hour. We'll have about a half an hour for panel. And please do just add your questions in the chat if you have them. And what we'll also do at the top of the hour is some of the presenters from today are going to kind of hang on and we'll jump over to a Zoom. So if anybody wants to, who's listening and is in the audience, wants to talk about the subject with a little bit more depth or is interested in getting more involved, we'll spend about a half an hour on that Zoom just having a free and open discussion. So hopefully some of you can join us. So let me just cover some of the important concepts and imperatives we think scientifically and policy-wise around carbon removal. And the first is just to really define what we're talking about. There still is some confusion sometimes around the very definition of carbon dioxide removal or carbon removal. And what this describes these are just activities that take carbon that's already in the air out of the air and then either use it for something or put it somewhere where that carbon will stay out of the air for a long, meaningful amount of time that's beneficial for the climate. And why this is being talked about a lot, really, in just a short, a handful of years, really, over the last 5 years, and more so, is because of the science. Right now, it's no longer controversial. The IPCC, in several of its last assessment reports, has been increasingly clear that carbon removal, in addition to decarbonization and adaptation, is an essential part of solving or addressing the climate crisis. It's no longer a nice to have. We've already crossed the line and we're going to need to take an enormous amount of carbon out of the air in addition to stopping future emissions. This is a very well circulated, somewhat famous graph from the IPCC assessment reports that really sort of shows the labor of that. So you can see on the top of that blue line is the emissions reductions that we have to achieve over between now and 2100. And then below that line is the part that carbon removal has to supply for us to reach net zero and ultimately get to net negative. And there's a lot to know about carbon removal in terms of what it is, but just at a high level, it's important to understand that it's many different things. That's one of the real sort of central features of this industry is there's not one way to do it. And there's not only are there many ways to do it, but those different ways from natural solutions and biostorage to more high-tech options on land and sea have fundamentally different underlying science in engineering and form functions and monitoring, reporting, and verification. So it's a very diverse portfolio that keeps expanding all the time. And we're starting to see projects in a very short period of time. This is a map which my colleague Phillip will drop from the carbonrules.org website that shows there's many different projects that fall across that spectrum that are at various different stages of development. So carbon removal is something we often think about in future terms, but it's very much a now thing that it is already beginning to really move on a global scale. And one thing that's become almost the cottage industry itself is the commentary and analysis of carbon removal, both in terms of the science and the techno-economics, but specifically focused on what has to happen for us to build this ultimately very, very large industry. So many of the top consulting firms and environmental advocacy and policy groups have written pretty prolifically on this subject in recent years. And one of these reports that we'll refer to, because I think it very clearly nails many of the key points, that we need to think about when we think about building a new billion-ton industry is a McKinsey report, which Jan Phillip will drop a link to. And they do many things in this report, but one is they just give a shape or a size to what this industry could actually look like in terms of as a sector. So we're looking at a $1 trillion sector potentially if this does align with what we have to do according to the science. So this is not a small and trivial new industry that's being built. It's a future $1 trillion one. And the other thing that they point to is that we can't flip the switch on in 2050 when we most need it at scale. Right now is where we have to be building the foundations and moving and accelerating carbon removal on many different fronts. So this has to be starting now, if not yesterday. So while we have to scale as we get into the future, a lot of activity has to happen right now commercially and in terms of policy. And on that, there is no future carbon removal industry at scale without a number of different policies around the globe being put into place to facilitate its scale. And that is policy at really every level of government, from multilateral agreements to certainly national policy, but also state and local have a very important role as well to play, particularly in this early phase. And here's another map, which we can share with folks after the call, of different policies. So this is a very active policy conversation where you can see on the map, those icons are either enacted policies, whether they're commitments or tax credits or permitting clarifications. We're starting to see more and more policies surface at every level of government around the world that relate to carbon removal. And what's important, and we'll talk about carbon removal throughout today's session in terms of the value chain, and that really relates to policy. So there's not one form of policy to make carbon removal happen. And that also means that different places, based on what their potential integration with carbon removal is, or what their competitive advantages are, or what their obligations are, will construct and forward policies that relate to different areas of the value chain. So some places might be well suited to actually be the host to scale up the physical assets that are required for carbon removal. Other countries will be helping bolster and increase demand for carbon removals. And then others still might have particular competitive advantages in intermediary services and finance, is which we will talk about today with Luxembourg, because we see that is the center of the opportunity for Luxembourg. So what I'll do right now is I will hand it over to my colleague, Jérôme Thomas, who's a member of LUX-TEN, operates a carbon removal startup out of Luxembourg. And he's going to lay out the case more clearly about what is it that Luxembourg has potentially that it can leverage to really put it in a leadership position and to help really drive carbon removal advancement in the coming years and decades. So Jérôme, with that, I'll hand it over to you.
All right. So thanks for the intro. So we are going to talk now about, of course, how to scale up carbon removal. And we're going to talk about tradition. We are going to talk about knowledge transfers and how it relates to everything. But most of all, we are going to talk about a missing piece in the whole puzzle. And that missing piece is really finance writ large. That is, how to set up a consistent, a coherent set of rules and institutions that allows trust in the CDR market to develop. What we think at LUX-TEN is that no country is better suited to put this together than Luxembourg. So, starting with knowledge transfer, this is maybe surprisingly a ship that used to go on the Lake Erie and from Detroit in the 1830s. And that led to automobile in the 1890s, and Detroit became the automobile capital of the world, as everybody knows. Now, how did we come from one to the next? It's very easy. Only shipbuilders had the engine about had the knowledge about engines that was necessary to build cars, and that's how Detroit became Motown. Now, this is an example of a type of knowledge transfer that is called the Jacob spillover. That is, when knowledge transfer happens from one industry to possibly an unrelated industry. And we think that Luxembourg has done this already a lot. It happens particularly in cities and small or dense diverse nations such as the Grand Duchy. But before we show how, let me expand a bit on why the missing link, the missing finance link, is a problem. That's another underestimated problem. The reason why there is so little demand today, even though maybe many people, many firms, corporates, and governments are keen to bring their emissions to net zero, or sometimes even below zero. The reason is that there isn't enough trust in the entire CDR ecosystem. So people don't trust the environmental integrity of existing carbon credits in all cases. And even if they do, they don't trust the whole process. They don't trust, for instance, that in case something happens in the transaction, the legal system is going to be there to help them. And that's not a given, as we are going to see why. So Luxembourg is, in our opinion, the country that is best suited to put together an efficient capital market platform for carbon removal. Of course, there is all the factors that you can see here listed on the slides. If you work in Luxembourg, you know them already, but maybe a bit less obvious is how, in the course of Luxembourg history, every new institution, every new asset class that has been developed has led to a body of knowledge that could then be transferred to another asset class. So starting with the holding law in 1929 and the creation of the Luxembourg Exchange, ironically, just a few months before Black Friday, Luxembourg evolved from the Eurobonds in the late 50s and 60s to private banking, UCITS in the 80s, alternative investment funds, etc., from their family offices. So we've had a continuous development, each phase and each product, each institution building on the knowledge built by the others. And as the current culmination of all this, we've got a broad offer of green bonds and green loans and climate-related funds, Article 9 funds, that is really now domiciled in Luxembourg or that are offered from Luxembourg. So that's the current state of play. And you can see that it's really a Luxembourg tradition to take a new asset class and make it a success. And Luxembourg does this through a concerted effort of the public hand and the private sector. The public sector, the government, lays out pragmatic, common sense rules that work, whereas the private sector takes the ball and scores. That's how UCITS developed by a factor of 4 or 5 times or 10 times in the 1990s. And that's how more recently alternative investment funds exploded as well in terms of assets under management. That's how before that private banking also was very successful starting in the 1980s. So, and right now we see this this dynamic with everything green. So almost everything. Because what's the part that's missing now is carbon credits. So what we think is that Luxembourg can build on this body of knowledge accumulated by offering the world, especially the EU, a complete set of financial or capital markets institutions, and really transfer this knowledge to today, build trust and in the carbon removal market, and really enable this market to scale up significantly to the astounding scale that is required if we believe the science. If we go back to what Chris explained about the CDR value chain, you've got supply and demand at the beginning, at the middle, where supply is really the biochar companies, the enhanced weathering companies, the direct air capture companies that will really supply basically tons of carbon removed. And demand is currently comes from big, large corporates, essentially. So Microsoft comes to mind. Closer to home, you've got Airbus in the financial sector. demands has been coming from names like BlackRock, and we're talking about significant numbers for now, but nothing like the scale that is needed and that will be probably realized in about a generation. So if you believe the McKinsey report that Chris has been talking about, we're talking $20 to $80 billion for the finance part of the CDR value chain, and $40 to $140 billion for the intermediation part. A large chunk of this intermediation is constituted by what's called MRV. The MRV stands for monitoring, reporting, and verification. That's the set of processes that guarantee or that give a reasonable assurance that a ton of carbon removed really has been removed and locked away for a long time. So we haven't been talking about demand yet, but that is worth some developments. So the voluntary carbon market today, if we include even temporary carbon removals linked to forestry, for instance, which have been around for a couple of decades already. So we are talking about $2 billion US per year. Whereas with financial markets, of course, we're talking hundreds of trillions of dollars. So the way to have the voluntary carbon market scale up to potentially rival or at least be handled in the same ballpark as financial markets is public policy. And going back to Luxembourg, Luxembourg has competitive advantages in two areas of the complete value chain, in finance and intermediation. So going back to the report quoted by Chris from McKinsey Sustainability, we see that there are large advantages to be gained by being early in both finance and intermediation. By being an early provider of financing to the carbon removal sector, you can develop market insights. You can basically build the knowledge and build your edge about over the competition. That's about building the moat that that could provide the long-term competitive advantage that prevents the competition to copy what you do for decades to come. And of course, innovating in finance could also help Luxembourg fortify its reputation. Luxembourg already offers a lot of products to get closer to net zero, and by also developing a complete ecosystem for removals, Luxembourg could allow financial market actors to really get to net zero. We really could put the net in net zero. Now, on the intermediation side, Luxembourg, by taking part in CDR standard setters and guideline bodies, could basically have a seat at the table to co-determine what is going to be the determinants of environmental integrity, and also to test approaches and strengthen methodologies, and attract new CDR buyers. So if we go back and take a look at the entire value chain, we have talked about finance and intermediation, and a bit less about demand. We know that a large scale-up in demand is needed for carbon removal to play its full role in achieving the objectives of the Paris Agreement. But how does that fit into Luxembourg's strategy? Well, we think the LNET, the Luxembourg Negative Emissions Tariff, NET stands for Negative Emissions Tariff, could provide the missing piece in the catalyst in the Luxembourg strategy. We are not talking about some future bill or future legislation. This has already been introduced in the Luxembourg Parliament, the Chambre des Députés. And it's modeled on energy feed-in tariffs, which have been very successful in expanding renewables throughout Europe. So the core of an energy feed-in tariff is that the subsidy is higher at the beginning and gradually decreases through time. That provides an incentive for the market to be early, and while the incentive is still high. So the LNet does this for carbon removals. So the objectives are to provide a rapid learning about not only about the supply or methods to ensure environmental integrity, but also about everything that's all around that. So finance, intermediation, we've talked about MRV, we could think about lending, insurance, and also trading. Luxembourg has a role to play in every part. Now, the core of the LNet is that direct payments are provided per ton of carbon removed. With multi-year contracts are signed, and every carbon removal project worldwide is eligible as long as there is an attachment to Luxembourg, ideally a legal entity in Luxembourg. The goal is to secure funding to de-risk those projects, by lowering the required rate of return, making it easier to invest in those projects. So the LNet really puts the final missing piece into the equation and acts as a catalyst and a signal to the world that Luxembourg is the place to be when it comes to carbon removal. The LNet, so this is the core of the LNet, and around that we are going to have to add additional language, additional legal dispositions to make sure that the legal nature of carbon removals is clear in Luxembourg law, and to decide what happens in a bankruptcy in case one counterparty defaults, etc. So that's why we think that building on top of everything Luxembourg has already achieved, the LNet could really help Luxembourg to achieve leadership in CDR finance in the EU and beyond. So before we move over to the panel discussion, I'd like to ask everybody if you're tuning in from Luxembourg or watching this video afterwards, I'd like you to join the discourse. You can do three things. You can contact your representative and ask what's the status of this bill. If that's too much commitment for you, you can join LUX-TEN. And even if that is too much, well, you can at least join the LUX-TEN community on LinkedIn. Because let me just ask two questions before we move over to the panel discussion. If you really think long and hard, if Luxembourg does not do this, who will? And if not now, when? With this, I'll open the floor to the panel.
Thank you so much, Jérôme. That was an excellent characterization of the possibilities for Luxembourg to lead here, which I think are quite unique. And now I'm really pleased to be able to bring on our panel, and we want to go a little bit deeper in that value chain where we can give our audience a closer sense of where carbon removal currently stands in terms of demand and supply and finance, what kind of barriers are present, and then again, relate those back to our strategy for Luxembourg. So I'm going to bring on the panel right now, and I think we got Phillip as well. And just to very quickly introduce, and I think that Jérôme or Phillip can add the LinkedIn and organization links in the chat. But we're very, very pleased to have Sebastian Manhart, who is the Senior Policy Advisor for carbonfuture. And he is also one of the founding board members of the DVNE, which is a carbon removal industry association in Germany. So he has amazing perspective in Europe and globally on movements and changes that are happening in the carbon removal sector. Also very thrilled to have Bilha Ndirangu, who is the CEO of Great Carbon Valley. This is a exciting carbon dioxide removal development company that is based in Kenya that's focused on Africa. And East Africa has emerged as a real hotspot for carbon removal movement and development. So she can give us some perspective from an African perspective, what the opportunities are for CDR as well as some of the needs. And then we have Phillip Wassenaar, who is by day a finance expert with NatureCredits, but he's also one of the core and founding members of LUX-TEN. So we're excited to have him here to be able to offer a direct Luxembourg perspective. So with that, we can go ahead and start. Thank you guys for joining us. Really appreciate it. Excellent.
Thanks for having us.
Yeah, great. So what we'll do is, I wanted to kind of go back to that value chain that we showed, and I think it would be good to educate our audience in a little bit more detail as to where things currently stand. So I wanted to start with Sebastian and Bilha, who both have knowledge of two key regions that a lot is happening. And to first, from your perspectives, maybe talk a little bit about what does the supply side of CDR starting to look like both in Europe and East Africa? What kind of companies are coming online? What kinds of CDR pathways do we see being the point of focus in those different regions? So maybe we can start there. Sebastian, you want to put both your hats? You can give a good answer, but maybe tell us a little bit about Europe and CDR from the supply side.
Yeah, sure. I mean, what we're seeing is, I think we're seeing an explosion of companies moving into the space across the board. In Europe in particular, we're seeing a lot of companies emerging in the direct air capture space, in the enhanced rock weathering space. There's a lot, I would say, for biochar carbon removal. We see that Europe is really the hotbed where a lot of the innovation, especially on technology, is happening today. Obviously, also with bioenergy, with carbon capture and storage, it's less players. It tends to be less startups, but big companies. But in the next 2 or 3 years, most of the volume, if everything goes according to plan, is going to come from BECCS. So that's again where, if we think about Stockholm Exergi, if we think about Drax, if we think about some of the others in Europe, we're going to see a lot of movement in that space. So overall, if I think about Germany, where I have my own experience, I expected to find 10, 15 suppliers. And once I started doing my rounds, I realized that we're well above 50. And that's just Germany, right? So for an industry that a couple of years ago, you would have struggled to find a handful of companies in one country, a lot is happening. Maybe later we can talk about also the investment landscape, the demand landscape. But if we look just at the supply, we see a lot of teams, mainly coming out of universities at this point, with some fascinating research. And that's one of the beauties about the CDR space, right? Every week, if you follow it, you find out about a new approach that was invented by some scientist somewhere that people now decided to commercialize. And that's definitely what we see happening all across Europe today.
Yeah, that's a great way to really stress. I spent 15 years in renewables, both in the global South and in North America, and that moved fast and that had its own diversity. But nothing like this. I mean, this is really quite breathtaking when we see the scope of different ways that carbon removal can happen. We seem to hear about a new one every day. So it's a pretty extraordinary thing to behold up close. So Bill, I wonder if you could, as I mentioned, East Africa with Kenya really at the center of it has, in very short order, although a lot of work went into it, I know, really emerged as a vocal, forward-leaning region for carbon removal, both in many different sort of pathways. So I wonder, as Sebastian did, if you could give us a bit of a picture of what's going on in East Africa around carbon dioxide removal.
Sure. Thanks, Chris, and good to be here, and thanks, everyone. Yeah, in some ways, when you think about CDR, I mean, I guess we are focusing a lot more on the technology or engineered type removals. 3 major pathways so far. Of course, the most ubiquitous one at the moment is biochar, and goes without saying, it's a little bit more. It's a bit more low tech. There's significant amounts of biomass, and so the fact that people are now starting to get some value on biomass that essentially, typically have gone to waste is starting to present some interesting companies. So what's now starting to emerge from a biochar perspective is a stratification where there's larger companies that use, more sophisticated technology, are requiring a lot more biomass material. Then you have interesting companies that are, smaller companies that are looking to sort of do community-based type things, where it's working with a group of farmers and seeing whether they can, develop biochar from that. And then, of course, a combination of biochar and fertilizer is starting to make some interesting use cases. I think from a biochar perspective, it's going to be interesting to see what happens over the course of the coming years, whether it becomes more driven by larger farms, or we continue to see this proliferation of smaller companies. Of course, the thing about smaller companies is a question around standardization. How do we get to a place where we are making sure that the biochar is being heated in the right temperatures and getting the right amounts of carbon sequestered therein. But I think it's going to be interesting to see how that plays out. The second one is enhanced rock weathering. I've seen a few companies that have started to do that. Of course, the biggest problem with enhanced rock weathering is the verification and the measurement, because I think there's still a lot of questions around that. It makes a lot of sense for Africa, both from the fact that our soils are very acidic, could actually, in and of itself, it's actually a really good thing for agriculture, leave alone the fact that it's actually being used to sequester carbon. Of course, the challenge there is going to be the measurement bit. And then now the bit that we're working on a lot more is direct air capture and storage. Here, there's one company that's actually based in Kenya, so the first Global South company looking at DAC. But interestingly, what's going to happen, and this is part of what Great Carbon Valley is looking to facilitate, and we can speak about this later, we do have the right conditions to do DAC, but of course, from a tech perspective, an innovation perspective, we're starting, a lot of the DAC companies that we're dealing with tend to be focused or, headquartered in the global north. But increasingly, there's awareness around DAC as an opportunity. And so my sense again here, it's going to be a couple of years where DAC will be driven a lot more by local companies in collaboration with Global North Technologies. But then hopefully with time, we begin to see a lot more innovation happening where local companies or local scientists actually coming up with their own DAC methodologies. But those will be the kind of the three main pathways that I'll talk about in Africa and East Africa in particular.
Yeah, I mean, I was in Kenya, and I saw you there in August during Africa Climate Week. And sometimes when we're working in North America or Europe, it's hard to look sideways to sort of see what's going on. And I was just really, again, blown away by the level of energy and participation in startups that are rooted in East Africa around carbon removal. It's really, really exciting. So let's move into, we'll bring in Jan Phillip on this as well, but let's now talk about finance sort of as a part two to that question. You both have your own companies that you work for, but considerable exposure to other players and startups in your respective regions, and the kinds of finance that they require and the kinds of challenges that they might be facing to get access to capital to start projects. So I'm wondering if we can go in the same order there with Sebastian, again, with your role at DNVE. Certainly, you have great exposure to many different startups in Germany. What are the range of different immediate and longer term financial needs that these types of companies need right now? And to what extent are there barriers that are standing in their way to access it?
Yeah, I think financing is definitely one, if not the major barrier right now. And the reality is that there's two types of financing here, right? One is just company financing from VCs and other investors. And here the challenge is that it's very, very hard to convince investors if there's not clear demand that you can plan for the next 5, 10, 15 years.
Yes.
And so it really takes investors who are willing to take higher risks, which limits the amount of investors that could naturally invest into CDR. And so we're seeing more and more investors moving into this space. I mean, last year, if I saw the numbers, we had 1.2 billion invested into CDR globally, which is great. It's much more than it was before, and we're seeing the right trend, but it's still a challenge. And this is why the LNet, this is why other policy measures that I'm sure we're going to talk about are so important, because they create the foundation that investors need to actually put money into it. And the second challenge we see is project financing. At the moment, most CDR projects are not financeable in a traditional sense. If you have a renewables project and you need to build a wind park for 2 billion, you are going to go to a bank and get money just for that wind park, right? You're not going to raise equity financing for a project. But that's what's happening a lot in CDR, because the projects themselves are not financeable by conventional banks. Folks are financing projects with equity rounds, and that is a very bad way to do it, but also the only option in a fairly immature market. And so I think, again, we can talk about it at length, how we can fix this, but to put it very bluntly and short, I believe that we need more government commitments. Government is the best buyer, so the voluntary carbon market can help. But if we really want to fix this, we need to have government put in 5, 10, 15, 20-year commitments that will help startups raise the funds they need.
Yeah, we'll talk about demand and policy all of a piece, as you just sort of referred to, Sebastian, in just a moment. But Bilha, I wonder, is this, in terms of what Sebastian just described, are there unique financing needs and hurdles that you face in your region that you could elaborate on?
Sure, we could spend a whole year talking about this. I mean, it goes without saying, we're based in Africa, so any type of financing or any financing problem that anyone is talking about, you kind of need to add the Africa premium. So that's always, it goes without saying. So there's always a risk factor. This is Africa. Who does this? Who's doing this in Africa? So it's taken quite a while to just convince people that this is actually a good place to do CDR. But that aside, and really agree with what Sebastian is saying, because the thing about CDR, and especially for some of these more advanced type technologies like direct air capture, it takes a lot more. It's not just, it's a kind of thing where if we think about financing for, say, tech companies, which is what a lot of VCs are used to, typically you sort of finance this from, you finance a team, they develop an MVP, and you're able to keep financing this on equity, and that works fine. Problem with CDR type projects is a lot of different things that have to come together for this to happen. And you're talking about both software, hardware, things around energy investments, potentially site investments. So there's a lot more that needs to come together, and I'll speak a little bit more to this from a GCV perspective. And so teams or companies doing this need a little bit more of softer money that allows them to do their innovation without feeling like they need to get returns very, very quickly, and kind of do the experimentation and do the initial pilots of, just to prove that this is possible. So I'll give some quick examples around what I think would be interesting sources of financing. Case in point, at the moment, one of the things that we're looking to prove in Kenya is we need to prove that it's possible to store carbon underground. We know that geology works. From typical research, from desktop research, we know that geology works, but someone actually has to come and drill a hole and actually store carbon and show that this is possible. And so that's the kind of thing that will probably be better suited by either concession or grant funding from governments or from development partners or philanthropic partners, or from project finance preparation facilities, with the anticipation that if this works, then you're opening up a whole new type of industry. So because of the heavy infrastructure requirement need that's needed for us to build this industry, some sort of project finance that's a little bit softer or geared towards grant funding, I think is really important to get companies off the ground. The second bit, and I think this is what Sebastian was talking about, is at the end of the day, it helps to be able to finance, or at least to be able to go back to your financiers with some sort of demand already locked in. And yes, there is a lot that's happening in the voluntary carbon markets. And so far at the moment, it looks like the demand outstrips the supply. But I think that's only going to be the case for a couple of more months or maybe a year or two before we really begin to, especially as more of these dark companies are coming online and moving from pilot stage. So to the extent that we can begin to get into compliance markets because at the end of the day, for as long as we can prove that we have demand for the next 10, 15 years, then it becomes easier for us to finance these projects for a really long time. So again, things that go towards pre-purchasing credits and hopefully locking in demand for a pretty long time, I think is important. And then of course, lastly, and I think this will come as the projects become more mature, is a question around how do companies begin to access things like project finance, and so there's definitely equity financing, but then there's a question around how do we begin to, help companies access things like, project finance, debt, etc. So again, instruments that a lot of companies have probably not had to deal with, but I think we'll have to get. And I was going to say the last thing, the types of companies or the types of financiers that provide this type of financing tend to be quite traditional, and so direct air capture, some of these projects are still so nascent and still sound very, very risky. So there's a question around how do we sensitize them? How do we de-risk the projects? How do we get them a lot more comfortable in funding this? And again, part of this would come from, a match-up in demand. So I think maybe summing it up is we need all sorts of instruments to get this moving. And I think we need to engage people, especially governments, DFIs, and people that have access to software funding to just catalyze this industry as we're getting it off the ground.
Excellent. Thanks, Bilha. And we'll get into the demand/policy for the remainder of the conversation. Before we do that, I want to bring in Phillip, who, in addition to being a carbon finance professional based in Luxembourg, he's also a member of the LUX-TEN team. So he's been very involved in advocacy around the LNet. But I was wondering, Phillip, if you could maybe offer a little bit of perspective on what Sebastian and Bilha just shared about the financial needs and obstacles. And can we almost relate that back to what Jérôme shared with us about the competitive advantages and strengths that Luxembourg has? So if we could kind of conceive of ways in which Luxembourg financiers could, and part of the investment community, could potentially get involved in this opportunity. I wonder if you could offer a little perspective on that.
Yeah, thanks, Chris. So and I think that's a recurring theme in the whole carbon credit market is that it's not yet a market as a lot of other commodities are a market. If you look at the more standard commodities, even the fossil fuels, that those markets are capable of dealing with hundreds of different products, different quality standards, different premium discounts for particular features, and the ability for the market to deal with fairly complex products, even like carbon credits, is definitely there. But what you now see is that within the carbon credit market, there is not really a single market. So if you look at the McKinsey report and other companies, hundreds of billions of dollars turnover, that doesn't work the way the current market is set up. So you can't do hundreds of websites, corporate credit cards, over-the-counter contracts between on the basis of bilateral arrangements. So your end stage or your mature market stage needs capital market infrastructure, trading on exchanges, and the support you're used to have around any kind of commodities, funds, investment products, and the regulations and the support that comes with it. And that's one of the things where, of course, Luxembourg has a long-standing tradition in saying, well, these are capital markets or capital market products that investors need, and those are useful for the overall world and to have, and sit down with the industries. Okay, how do we do this properly? So how do we make sure that risks for investors are done, that the quality is assured, that there's regulation that ensures quality but doesn't kill the market by unnecessary red tape. And I think from that tradition, the Luxembourg government is really in a good place to say, well, we have this massive capital market asset management infrastructure here in Luxembourg. Let's define how carbon credits should look in 5 or 10 years, get the legal framework in place, and then you have this valley of death for investors that you have from a good idea. You have your first product, viable product live, and then that upscaling is the hardest part, and that's where Luxembourg can really help move or get companies to fund themselves to facilitate that scale up. And that scale up is then where the Luxembourg government can help both with money, but also with providing the infrastructure. And both speakers already mentioned that there are risks that are very difficult for banks and for fund investors to overcome. And this a lot of the what LNet tries to achieve here is that you break down these risks, and you put them with people that can actually hold those risks and that are equipped to have these to own these risks from that perspective. And then the final stage that you want to achieve is to be able to fund these projects on the basis of a project finance type issuance, and you have a carbon purchase agreement that needs to be listed on a capital market. And also to talk about legal risks, one of the problems if you about carbon credits, if you talk to capital market infrastructure bodies like the ISDA or IATA, they say, well, the carbon credits don't really exist from a legal perspective. And of course, that makes a lot of both lawyers but also bankers very nervous. If it doesn't have a tangible, or not even a tangible, but if it doesn't have a proper legal definition, you can't look up the relevant regulation and infrastructure that you need to fund these things, to take ownership, etc. So it's there's quite a lot of things that Luxembourg can do to actually address these funding needs for those investors, and it really starts with the helping that market to develop, but also overcome the growing pains from viable products to a sale.
Yeah, and I think one of the things that Jérôme referred to in his presentation is that you have certain conditions in a small, dense nation like Luxembourg that gives rise to the spread or the spillover of knowledge from one area of a sector into a new one. But the other thing that's really important to point out about Luxembourg is that it has a history of the government being very strategic about those opportunities. So it doesn't let the market just unfold by itself, but if it sees that there's a competitive advantage that Luxembourg might be able to seize, it brings in the policies that can actually help support that outcome. So it's that impulse, I think, that's incredibly important. So let's move on to the demand and policy side, which is good to spend the final 10 minutes on. Certainly in the United States, where I'm based, we've seen popping up on the state and federal level policies that are meant to help create demand and support supply. Particularly now on the demand side, we have a new government procurement pilot that will be introduced shortly. We have multiple states now with different demand side policies for CDR, including California and Massachusetts. But I'm wondering if we can start with you, Sebastian. There's a lot going on in Europe right now that has to be agreed between states, as well as some moves that are being made by member states. I wonder if you could describe to us a little bit of what's the landscape right now around CDR support policies, and definitely please do name and go into some detail on things that relate to the demand side of this.
Yeah, happy to. First, it's important to understand that EU has 27 member states, and budgets are set at the national level. So when we think about creating demand for CDR through policy in Europe, I would say that there's really three levels to think about it. The first one is goal setting. So this is something that it's very timely. Tomorrow, Europe will announce its proposal for emission reduction and carbon removal targets for 2040. It will recommend a 90% emission reduction and 10%, or it's actually a 75 megaton carbon removal target, industrial carbon removal by 2040. And I think that's the highest level, which is super important, which is basically just setting the goalpost, which will then apply to all 27 member states for how much carbon removal needs to happen. If we have that number, we can develop policies to achieve that number. The second layer, and it links to what was just discussed to create more certainty, is actually defining what a carbon removal is, also legally. How we're going to monitor it, how we're going to deal with reversals, with liability, with leakage. And that is what the carbon removal certification framework, or shorter CSCF, also at EU level, will do. The legal text should be finalized in a meeting on the 19th of February. And that will essentially provide, I think, the world's first and most robust framework to actually define what carbon removal is. And that will hopefully become the building block that will be used across Europe, but probably also as a gold standard across the world when talking about carbon removals. And the final layer at the member state, this is where we're really developing demand side policies. So there's already a bunch. I mean, if we look, for example, at Sweden, they've actually put aside 3.2 billion euros for BECCS, which is something that, you know, is almost as big as DAC hubs in the US, but got nowhere as much coverage. We're seeing different countries like Denmark making big bets on biochar carbon removal with a very ambitious biochar carbon removal target. We're seeing Germany putting money into direct air capture at the moment, for example, with CapEx support. So we're seeing a bunch of things happening at the member state level, but I think to really catalyze what's happening at member state level in Europe, we need those clear targets and clear frameworks. Once these two are in place, you know, Germany will have to find a way, for example. It might be public procurement, it might be feed-in tariffs, it might be tax credits, we'll see. Every country will pick their own way. But these are the levels at which we'll operate in Europe, and a lot of stuff is happening, and tomorrow is actually a huge day for that.
Excellent. Thanks, Sebastian. I do have a question on that too, just as a follow-up, again, to put this in the Luxembourg context. So you mentioned some of the countries that are now emerging, and they're really sort of focusing on cultivating conditions for supply, right? That they can do these different pathways in their countries, and they're going to be integrating it with their larger climate actions. There's, to my knowledge, not a country that yet is sort of really specializing, whether just organically from the private sector or from the public sector, actually trying to put together conditions that are focused specifically on finance, right? To really kind of own that and become a hub and put the regulations in where it can really play a meaningful role in bringing capital to these projects. Is that fair, or am I missing something from the European context? I don't know if there's anything you can share.
It's very piecemeal right now. I would say that Switzerland is not the EU, but it's Europe, and it doesn't get anywhere as much credit as it probably should. For example, we always talk about the procurement pilot by the Department of Energy in the US as being the first big government procurement pilot. It's actually not true. Switzerland did a 50 million franc public procurement already a year ago. And they had already a bunch, I think 4 or 5, mainly BECCS mineralization projects that they've already procured in that way. So Switzerland is really, I think, quite advanced when it comes to thinking about more of the financing side. But in the other countries, it's very piecemeal. We're nowhere close. But again, I think everyone is also, the thing is in Europe, the member states also kind of holding off and seeing what the European Union is going to do, right? Because they don't want to work in parallel and duplicate efforts. And because there's so much happening in Europe right now, I know from my conversations with various government officials in different countries that they're also saying, okay, we want to see what the CRCF says before we get to work, for example. So it's a bit of a holding pattern, but I do have hopes that soon a lot of this will increase in terms of pace.
Yeah, and so it sounds like, as you said, the beginning part of your response to the last question is that that scaffolding is really starting to take shape. This is a kind of a critical year around sort of standards, targets, how member states can interact and work from basically the same set of guidelines. That is moving. There's still some suspense around that, but it's certainly moving at a rapid rate, it seems. Excellent. Yes. So Bilha, I wonder, we have a few minutes left, but one I think that I really wanted to sort of get your comments on is that as you were talking about East Africa, and this holds throughout many regions of the world, there's enormous latent potential to do carbon removal at scale from a supply side. When we talk about demand, the burden of creating demand through government intervention should not lay in the global south, which has contributed the least, obviously, to this problem and has less resources, obviously, to spend in such a way, which makes it really important for policies that are demand support policies or supply support policies in the north to be inclusive of projects in the global south. And that is one of the features of the LNet. I wonder if you could just talk a little bit about, if you are making this sort of ask to policymakers in places where these kinds of policies could be stood up, why is it important for bills like the LNet and other ones to not just focus within their own jurisdictions, but to also support projects that are in East Africa and other areas of the global south?
Sure, thanks for that. Really critical. Couple of reasons. One, I think it's always important to remember that, I'm stating the obvious, but I think it's important to remember that carbon is climate change, carbon affects all of us, and regardless of where the carbon is emitted, it does spread pretty much equally across the board. So any ton of carbon removed anywhere in the world is pretty much, because it's important that we recognize that, so you can remove carbon from anywhere in the world. And that's important because sometimes you'll hear people saying, why should the global south be removing carbon for the global north? But it actually doesn't matter. We can remove carbon anywhere. And I think the question now needs to be, what are the best geographies for carbon removal to happen? It so happens that East Africa and Africa in general have some of the best geographies for carbon removals. And so to the extent that we are not responsible for a lot of carbon, for emissions, just given that Africa contributes to about 3% of global emissions, we're in an interesting position where we can actually, when I say we, I'm talking about Africa and East Africa in particular, we can actually provide some of the best solutions for carbon removals in a way that both helps the world decarbonize, but secondly, creates jobs and economic opportunities for the global south. And I think that's a really important aspect for us to think about. So think about, I'll just talk about that, but we can talk about all the other pathways real quick. You need a couple of things for it to happen. One, lots of renewable energy, which is not the case in most of the global north countries where DAC is happening, tend to have very fossil-led grids. I live in Kenya. Our grid is about 93% green. So we're starting from a very green grid from day one. So we need lots of renewable energy. We're not utilizing 1%, even 90% of our renewable energy, partly because there's no demand. So something that actually comes in and, utilizes our renewable energy is actually really important. Secondly, the ability to store carbon, especially for mineralization projects. So we're sitting on the Great Rift Valley, which, because of volcanic rocks, allows us to actually store carbon underground. And then thirdly, labor and talent. We have lots of labor, lots of talent that's going to only increase as the population keeps increasing. And so I think when you think about CDR, for us, we think about it as both a way to decarbonize the world, but at the same time, a way to actually spur economic development in some of these regions, both by creating a whole new industry that doesn't exist. But in Kenya in particular, it's a way to unlock the use of all this renewable energy that we have, that we're not unlocking because there is no demand. And so not only are we going to use the energy for carbon removals, but we'll actually begin to improve access to energy and reduce the cost of energy, which has overall effects on the economy that helps people access energy at cheaper rates, etc. And so there's lots of interesting core benefits that come with doing CDR in the global south. And in this case, we're not even asking for this to be done as pro bono sort of thing or an development type thing. It's thinking about the investments that are going to go into carbon, into CDR. If we can begin to bring some of those investments to some of these geographies, it will go a long way in, as I said, economic transformation. And the one thing, now to answer your question, Chris, the one thing that's actually, in a sense, standing in the way of that is policy, especially in the global north, that allows companies and gives companies incentives to do these projects in the global south. So, for example, we're not going to compete with the IRA and the incentives that it's giving to companies in the US. We can give incentives such as low or zero taxation policies for a period of time, etc. But if, say, a dark company in the global north or in Europe knew that they could access the same kind of incentives by locating their projects in the global south as they do in Europe, that would change things a lot. Or if we're allowed to, as compliance markets begin to open up and we're allowed to trade in compliance markets regardless of where the carbon is removed, it then begins to shift the dynamics of this conversation. So I think the way to think about it, I'll summarize that, and I realize I can spend a lot of time talking about this, but let's think about it from what are the best geographies to do CDR, and what's the best way to incentivize companies to co-locate or locate some of their projects in those geographies. And in our case, not only does it create a whole new industry, but then has a lot of other core benefits that are important for us to keep in mind. So I'll stop there.
Yeah, that's great, Bilha. And we'll wrap up, but I just want to put sort of again, link back to Luxembourg. What you just said is, for countries in the global north, in order to be able to sell this politically and capture the full value of participating in the carbon removal economy, the building projects and creating jobs locally is significant. So if you're going to incentivize the demand, you'll see, or provide finance, you'll see some of that being restricted to particular geographies. In Luxembourg, though, it's different because the play for Luxembourg is never going to be to build a bunch of direct air capture facilities within the duchy. That's not what it does. It doesn't have the space or resources to sustain that. This would be a finance play. And so it would be developing Luxembourg's ability to finance projects, and obviously that will have a global scope to it. So that is one of the things I think is interesting. And Luxembourg does have a tradition with development finance and wholesale lending for microfinance, and it has a history already there that could be leveraged. So with that, I want to thank our panel for joining. We are going to do, I added the link in the chat. If anyone is really interested in hearing more about this, but more importantly, being involved in carbon removal in Luxembourg, and particularly around advocacy for this already live bill that we've introduced, which is the first kind of its in the world, please do join us. This will just be an open conversation. You can ask whatever question you want, and we can talk about it. But I will, just as Jérôme said, just urge you, this could be really, really significant for Luxembourg and for global CDR if we really do see leadership from a state like Luxembourg that has the assets and advantages it does applied to this sector. It really does fill a gap. So we do encourage you to stay tuned, join the LUX-TEN LinkedIn group, which we've supplied the link for, and get involved, and let's get this passed. But hopefully we'll see some of you, if you can grab the Zoom, there it is. I see Phillip put it again. And hopefully we'll see some of you in just a moment on the Zoom. But thank you all for joining us, and we'll see you soon.